Welcome to the Daily Brief, where we'll go over the highlights in the market for Tuesday, September 13th, and then see how things look for Wednesday, September 14th. What a negative day, down over 4% in the S&P. Pretty much all of the things that were looking positive have been wiped out right now and have switched back to looking much more negative. I go through the charts in the full-length video, so please check that out if you have a desire to do so. And the markets got caught off guard again. So what happened? Right at the open, we had a massive gap lower below S1, S2, and even S3 down at 4,033. And then we even dropped below S4 at 39.98. Now, those are the only calculations I know how to do because things got even worse after that. Prices then went sideways for a little bit until more selling took prices even lower. They're blaming that on the fear of sanctions being placed on China because of what's going on in Taiwan right now. So we'll have to see how that plays out. But the market just wanted to keep going down and experience gravity and was pretty much going to use anything it wanted to do to go even lower. So going into the close, we closed almost at the low for the session. We were down 4.32%. Wow. On above average volume. So you have a lot of the bearish folks out there that are really patting themselves on the back, even though they've been saying the same thing for 20 plus years. They finally might have got it right, at least on Tuesday. We'll see if they continue to get it right. The technicals have pretty much switched back to negative now. We were showing some incremental and some nice improvement in the technical picture. We were regaining moving averages, regaining resistance levels. All that was pretty much wiped out in Tuesday's session because of inflation and interest rates. That's the real focus for right now. Stocks created an unrealistic inflation scenario, and they've been burned by this, or we've been burned by this now. This is for like the fourth time this year where prices started to go up. Maybe inflation is topped out. It's going to come down. Yeah, some of our economic reports are weaker, and then either the Fed steps in and says, no, or what happened on Tuesday, the CPI came out and it wasn't weaker than what they were hoping for. And so the market got caught off guard on the wrong side again. And this is because the CPI did not decline as hoped. And it was basically this scenario was being developed by lower gas prices, which is nice, but it didn't come over into the report that came out. And so they're even talking about not only a 75 basis point move in September 21st at that meeting, there's now talk of a 1% increase in interest rates. So the S&P 500 and the NASDAQ naturally lost their 50-day simple moving averages and pretty much anything else. And that trend line that we've been building that positive support off of, well, we closed below that too. So we do have more inflation economic data coming out this week. We have the PPI on Wednesday. We have retail sales on Thursday. And if you're hearing some weird noise in the background, I can't really control that. And then we have consumer sentiment on Friday. The 10 to the 2 and the 10 to the 5 yield curves are still inverted. Sentiment has dripped over into the fearful side and not necessarily extreme. The other reports that came out, we had the NFIB small business optimism reading. It actually went up to 91.8, where it had been 89.9. Then this is the biggie. CPI increased 0.1, where they expected it to be down 0.1. And then when you take out food and energy, it rose 0.6%. Well, that's double what they expected at 0.3%. And then on the year-over-year basis, 8.3 is the annual inflation rate. And then I have other charts that I go through that show that really inflation is up around about 16.5%. So please watch the other video for that. And then the core is still up at 6.3%, where it had been at 5.9%. And that's the thing that kind of freaked everybody out because they thought this was due to gas prices. Well, if you take gas out of there, it still went up. Treasury budget also showed a real increase in the deficit. Not a surprise there. Our trend has switched back to negative. The red line has crossed above the green line and we're below 20. So you might suggest this is a trendless environment. With the down day, our bias is negative, and I switched the momentum back to mixed negative. Mixed because maybe we overdid it and we might get some kind of a bounce in Wednesday's session. We're going to have to see what the PPI says. but it's still pretty strongly leaning negative. So what's our outlook then? We've switched back to negative overall. We have the weekly MBA mortgage applications index coming out. Now we've been seeing that decline as housing prices have gone up and interest rates have gone up. So we'll see if that decline continues. We have the producer price index or PPI coming out, and then all the geopolitical events. And I mentioned the things about China possibly having some sanctions imposed against them by the US. So our scenarios, we could go with the down scenario because of all the things that are happening right now. And our technicals have switched back to being negative. We can't really go with the up scenario. That was pretty much wiped out. And our scenarios, our rotation, our setups, all that showing a lot more weakness right now. We lost a lot of the moving averages and resistance levels that we had picked up. We could be in a sideways trend, but if we really start to move, that ADX is going to turn up pretty quick. But right now, it's just a little bit below 20, and it has switched back to negative. So our conclusion, not hard to make here. The S&P overall is back to being negative, short-term negative, intermediate term, and long-term negative. So thank you. Please feel free to check out the full-length video. We'll just kind of take these markets one day at a time and see how things play out.